Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's August 14th. This will be our chart listing for today. And you can see we had a little bit of a rally day today. It on the 2000 tick chart, it doesn't really feel like a rally day. It was mostly a range day, and you can see the resistance is we still closed. We traded above that momentarily, but we still closed below the resistance. So it still feels really more like a range day than it does a rally day. We did close up, not by much, and this just could be a pullback to retest the support resistance. And if it does close, the fact that it has closed inside that, if we do turn back down, I would think our target would be this lower trend line if we don't even get a break finally. But we'll just have to see. We could turn back up here. We could even pull back up and test the upper side of this what looks like a range here and then turn back down before we go lower. This could work out a lot of different ways. To me, it looks like we still have room to the downside. So that's where I was leaning today. We did close up today, but not by much. So I wouldn't call this a huge up day. But my guess is we should try to retest this trend line at a very minimum. So we'll see what happens tomorrow. But let's flip over today and look at the 2000 tick chart, and I'll show you how I see it personally. And here it is. You can see we were up, down, up, and then we just kind of went sideways into this really from mid-morning to we're just about to close to the close. It's just not much more happened. We just kind of stayed in this range here. Before I do get into the chart lesson, I just want to remind people, I probably don't say this enough. People get confused and they think we're pattern traders and we're just looking for these second entries and two-legged pullbacks and things like that. We are not pattern traders. You can see two-legged pullbacks or second entries all over this chart, but you need to understand that if we're in an uptrend, you're not looking for second entries to go short. And if we're working sideways, you got to be real careful with second entries unless there's a trend in there. We mostly look for second entries in trends. If we're trending up, we're looking for second entries longs. If we're trending down, we're looking for second entry shorts. And if we're going sideways, we're playing range rules and we're looking to go short off the highs and long off the lows unless we find a range in here that we can trade. Oh, I'm sorry, a trend in here we can trade. And then you trade the trend just like any other trend. You're looking for second entry shorts and or second entry longs or whatever, or failures, triple tests, things like that. But on a range, most of your best entries are going to be longs off the support and shorts off the resistance. You got to be real careful in the middle, getting short into the upper side of the middle or long into the lower side of the midline, because that midline is a minor key entry point and it can act as support and resistance. And you can see it took a few tries to get through here before we finally went higher. Same thing coming down. We bounced. Same thing coming up. It takes a minute to get through, and then we get some resistance underneath it, and then it acts as resistance. So just keep that in mind. I probably should say that more often, but it's amazing how many people send me something and say, you took this second entry long right here, and here's one that looks just like it that I took. Well, why is your trade good and mine's bad? Well, it's because the chart's telling you something totally different. We're chart traders. We only use the patterns to narrow down our entries and time them, and time our price level entries. We're really reading the chart, getting an understanding based on the rules, how price action moves. That's what the rules are supposed to help you with, to learn the movements of price action. And then this is like learning to speak a foreign language. Reading a chart is. And then even once you learn to read it, it's like hearing it in a broken language. So if English is not my first language and I learn Spanish, I may speak Spanish very poorly and in broken Spanish. But if you listen to that long enough, you learn how to pick it up, and you learn my voice pitches and my mistakes, and you eventually learn to understand me, even though I don't speak perfect English. It's the same way reading this chart. Even though this chart doesn't read a clear, perfect language, you learn it over time, and that's why it's so hard to learn. But you're basically learning a foreign language. and you're learning to read it in broken by a broken speaker that doesn't speak it very well because it's not always 100% and it's not always perfectly clear. But if you learn to read this chart, and this is just my opinion, but anybody that makes money as a day trader on a daily basis consistently, they can read this chart. They may not even call it price action trading, but they can read this chart. They understand price movements. They know price movements and they can read them. That's why 10% of the traders make all the money, because 90% of them are just donators. They come in here, they read a manual, they read a book, they take a course, or they study a little bit, and then they try to trade live and they can't figure out why they can't do it. Well, this is a skill and you're not going to learn it. You can't expect to pick up a baseball glove and bat and go play in the pros tomorrow. You got to work on that skill and hone it, and you got to have a little bit of talent to begin with. But you got to hone that talent before you could ever make it. You got to, even the pros start in the minors and they work their way up. Most of them played college or they were really super good in high school, born just naturally talented. But then they still usually have to start out in the minors and work their way up, and a lot of them never even make it to the majors. So it's very similar to that. You have to hone your chart reading skills, and it just takes it takes longer than people think it does. Excuse me, I'm sorry. I get to talking, and I'm still struggling with my allergies around here. I mowed the grass yesterday, and I don't usually mow my grass, so somebody mows it for me, and I mowed it myself, and I've been wheezing and sniffling ever since. So seems as the older I get, the worse my allergies get. But anyway, not to get off track there, I probably should say that more often about our chart reading and what it takes to learn this. But let's zoom in here and take a look at the trades and wrap this day up. 7 o'clock came as we're trading down into here, into this little range here, and there's just not much here early on. There's nothing that really attracts my attention here until we finally get a little triple test right here and a fairly decent. And it's also a first entry, second entry. This looks a little congested, but you can clearly see the resistance there. And if we break lower, we'll probably test these lows. So if you got room there, take that trade. There's another second entry right here. Maybe you enter that on the engulfing bar. This is a good example of why you got to be careful with these engulfing bars. I really didn't want to mark that. I don't know why I did that, but this looks like it's going to be it is a second entry, and it looks like you would think we'd probably go lower, but it backs up again, and then it breaks higher and stops you out, only to go exactly where you thought it would go. And the way you normally play these, the way I play them, the way I suggest you play them, if you did trade this engulfing bar on a second entry short here, and it turns out to be an engulfing bar, always put your stop above the previous high. This was the previous high, but it's the same level, so really you have to go to this one and your stop would go above there. And if you do that, you generally won't get stopped out. And you see here, if you draw that line across there, you don't get stopped out. You just make a double top. So if you took that on the engulfing bar, make sure you you always know to go to the previous high, and here you had to go one more because this one's equal to this one right here. Because you don't know where this bar is going to close, and then when this one breaks higher, if you'd put it above here, then you wouldn't have got stopped out. Generally, you should move it after this bar closes, so if you did that, you probably would still get stopped out on this one. So this was not a great one to take, and if you waited till it closes, you can't take that trade. So that's basically what I'm trying to describe there. I just don't. If you took that trade, you had to do it on the engulfing bar, and that's always a little risky. But anyway, it is what it is. If you took it, you got a loser there. We come down here, we bounce again. I would have liked entering here. I would have liked entering even here if they broke higher, but they never did. And then you got congestion there. You got 3 bars in a row, and at least one of them has no body or a tiny body. Same thing here. So you can't really take either one of those. Here we finally get a triple test. You might look at that as congestion, but on a failed breakout, and this actually broke higher here and made a little trap. So if it breaks lower, you'll probably get your scalp out of that. I like that one. And then we finally break out down here, and you get a first entry, and then you get a second entry. We're not really looking for second entries in a range, but if you get a setup and it turns out to be a second entry, then give it a little, give that some value. Really, why I like this one, it gives you a higher low, and if it breaks above that, we're still a long way away from the EMA. And most breakouts fail. We'll probably go back in, and a lot of times these turn out to be major low points. And you can see this turned out to be the low. It wasn't the low of the day because of the overnight over here, but I would basically call this the low of the regular session. And if you caught that, you catch a runner, and you could ride this. You could ride it all the way up. Depends on how you want to play your runners. If you just rode out this first move and then closed out as soon as we started turning back again, just say you rode it out the top, and then when it starts backing up, you got out. You could have got 5, 6, 7 points easily 5 points if you just waited till it broke below. Actually, if you waited till it broke below the next bar, you got a little more than 5 points. And that erases a lot of losers. So these are one of the times I like to try to get runners on breakouts of ranges like this at important lows of the day, or they're risky, so you want to wait on the high or low right there. And a lot of times they don't, almost all breakouts fail, even if only momentarily. So ride it back to the EMA at a minimum, but there's you a great chance to get a runner there. And here you get a first entry, and that's a second entry when it breaks higher, but I still think it's too early to try to go long here. But notice how it comes back and gives you a higher low right there and a pretty decent bar. And maybe you take that one. I mark that one green because now you've tried to go lower 1, 2, 3, 4 times, but then you make yet another higher low, and that's a failure if it breaks above that bar right there. I like taking that one out of there. You don't get much more than a scalp out of it, but sometimes those will take off and give you a runner. I don't see anything else here I like. Then we're just kind of skipping along. I really don't see anything I like here. This really small bar here is tempting. It's only like 4 ticks. If you took it, though, there's just enough to get out of there. And this is a good example of why we scalp for 4 ticks. You'd be surprised how many times a trade like that will fail, but it'll get its 4 tick. You need 6 ticks really if you enter with a buy stop. And you'd be shocked how many times. There's a reason we go for 4 ticks. So all you people that want to change it and try to go for more, you're really going to reduce your win rate. And those of you that think you can scalp for less, it gets extremely hard, more difficult the lower your number goes. So I never scalp for anything but 4 ticks, never anything less than that. If the market's really doing well, I try to get a runner. I don't try to scalp for more because I want to make sure I don't have a loser, and I want to make sure I make money on every trade. And that's how I do it, by always scalping for 4 ticks. But you might take that trade. I didn't mark it, but I think it's a little risky. It looks a little congested, but it is a higher low right off the key entry point. It's only a first entry though. But again, it really doesn't matter. You can get a little trap here, but you can't go long right into that resistance because you see it fails. It probably would have got a scalp before it failed, but it's just not worth it. And then, of course, you come back. You get a first entry. You pull back. Even though this doesn't break lower, you get that 3-bar matching low. The prices tried to go lower 3 times there. So if they break higher here, we're probably going to at least go ahead and make the new high on the first close outside that trend line. This trend line has drifted up a little bit. It should be more like that right there. And so I like going long there. You don't know that you're going to get a runner like that, but you do, and that thing just takes off, and you actually get 2 legs up. It's not quite two measured legs, but it is 2 legs, and you actually get another first entry, second entry here right off the key entry point again. I'm not as crazy about that one because there's not very much room to scalp out, and you've already made a new high. This could break higher and fail and turn down on you. But maybe you take it. Same thing here. You get another second entry, but that's definitely too congested. Runs up. This one's tempting to go short, but that's the high of the day, and it could still push up again. I would wait and want to see a reversal here, and you get almost a perfect reversal, even though it doesn't take on off. It's a quick, easy scalp. and then you get a reversal back to the upside. Same thing. This is also a first entry. Let me zoom in here a little bit. I'm sorry. You get a first entry when it breaks above this bar. It's a second entry. Actually, it's on this bar that breaks higher. But I like going long there because it's a failure too. It actually was a failure when it broke above these two matching highs. If it hadn't been a failure as well, I don't know if I'd have went long here because that looks too congested. But with the failure, you probably get a scalp, and it may run all the way back up and test the highs again, which it eventually does. It makes a new high actually. I don't see anything else here I like. I don't see any shorts here. And then you get a second entry short here. Notice the first entry, and then it turns back up again and turns back down. If it breaks lower there, that's a second entry short. And that's a big bearish bar. It should be over just a little bit. And this thing takes off again. You probably get a runner there. Actually, you may not get a runner on this one. There's another one here somewhere I think you get a runner on. And you drop down here. I don't like this one. If you took it, it works and it is a second entry, but we got a little bit of an overshoot. But we had a lot of support across here, so this could be a failed break lower. Originally, I had this a little bit higher here, and I moved it down because later on it seems to have widened here. But it's tempting to want to go long or go short right there, but I don't think you should go short right into that support first break. I mean, there's room back there. Maybe you take that one, but because of this little overshoot, I'm not too crazy about it. I wouldn't take it. So we run up here, you get a break, just a first entry, and then next thing you know, you've tested the high again, and we do make a new swing low here simply because that's a 2-bar. Actually, you got a 3-bar matching low. When it breaks lower, it's like a new high. So first, or new low, first entry. So this would be, that's 2 legs up, second entry short, fairly bearish bar, still way away from the EMA. I like that one. There's a reversal here, but there's support there, and there's not much room, so I'm not crazy about that one. And if you look, by waiting a few minutes later, you get a perfect second entry right off the key entry point. Nice signal bar. You barely get a scalp out of that, but there it is again. That's why we go for 4 ticks, and because you would have got stopped out. This actually, to me, the reason I drew this line here and didn't mark this one is because to me, this is just a first entry. Even though by the counts it's a second entry, does that look like a leg up? It doesn't. This looks like the first real leg up altogether with 2 legs in it. Then this would be the second leg up. So there's your true second entry. And look at it go. So if you took this, I think it got 4 ticks. I can't remember. But that's why I don't like that trade and didn't mark it. Actually, it's 5 ticks, so it would have been a 1 tick failure. And that's a great example of what I always tell people, don't just go by the counts. Make sure it looks like 2 legs. Now, if it's a really strong trend, I'd probably take that. But in a range, right in the middle, kind of like this, that just looks like 1 leg up to me. Even though by the counts it's first entry, second entry, you can see you would have got fooled there. Because really your first leg didn't happen here, and there's not even 3 bars in that. You need at least 3 bars to really count it as a leg. And they have to be trending, and these are just going sideways. And this was the first trend bar, and this one second one. So there's not really enough bars. So that whole thing looks like 1 leg with 2 legs in it, and then a first entry, and then a second entry. That's the way I would play that. Drops down here, it bounces, you get a close outside. There's a second entry there, not a very good signal bar. You might call that a lower high, but again, I mean, technically that's a second entry because you made a double bottom. I would count that as a new low, but your signal bar is not good enough. Failed breakout here, but no way to enter it, and that takes you into 230. So, really, it was pretty all straightforward except for that one trade there. That's one where you need a little experience. But hopefully that made sense, me explaining that. again, just because your count says second entry, make sure it looks like two legs. Clearly that looks like two legs all together, but if you count this, it doesn't really look like two legs. Um, it just looks like sideways with a failed breakout, and if even that. So it just looks like sideways with a big bar that shoots up and comes. I mean, most of the time when you push through that midline, it's going to come back and test it. And here it even comes back and gives you another test of it. So, but anyway, that's how I saw it today. Uh, looks like the volume kind of dropped a little today compared to what we've been seeing some of these days. Maybe not a whole lot. Maybe it's starting to. I mean, a couple of these days had some really big volume on some of those big sell-off days. But that's not unexpected. So anyway, there it is for today. Hope you had a good trading day. We'll be back again to do it tomorrow. This is how I saw it today. I'm done. We'll be back tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.